Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully all of you had a very nice day of trading today. And in today's markets, guys, well, the volatility for the month of January simply continues at this point. We started off the morning quite red on the SPY, the QQQ, and pretty much all across the board. These are the opening candles before clawing some of that back and setting some nice hourly uptrends in motion for the end of the afternoon. Largely, the markets were ending green across the board at the end of the day, and some of our major sectors that we've been desperately needing for some rotation have finally started to put together somewhat of a bounce, namely financials and healthcare. The emphasis moving forward is still going to be on yields because we know, as I've been describing over the past few weeks, yields are putting a tremendous amount of pressure on equities. They are really counter forces right now in the markets. Very tough for the SPY and the QQQs to put in new all-time highs, even though the fundamentals of these companies have not changed over the past few weeks. The rapid rise in yields is really putting a lot of pressure on the equities market, especially on some of the sectors that are most exposed to these rises in interest rates. So, that being said, the reason for the decline this morning, guys, quite simply was a case of a less than favorable jobs report that we got in terms of private employment measured by the ADP employment change, coming in at 122,000 jobs created, which is still good, but under the expectation of 140K. Now, if you remember yesterday, I was saying how funny and how confusing this market can be at some times. Yesterday, we got a very strong jobs report as well as a sticky ISM services PMI, which pointed to the fact that the Fed could be in no rush to continue cutting interest rates. The economy is good, the jobs market is still good, inflation is somewhat still sticky, so yesterday the markets had a very big drop in relation to the fact that they were throwing a little bit of an interest rate tantrum. Now that is funny because yesterday, good news for the markets in terms of jobs was actually bad for equities because of that interest rate tantrum that Wall Street was having. Well, you would expect if we miss a jobs report like this morning, the markets should respond in a green fashion. Not the case, guys. Today, bad news was in fact bad for the markets. So the volatility for the month of January, as we kind of navigate through this uncertain landscape, will probably continue in my opinion. And this is just another example of not fully trusting the markets in the month of January, fully focusing instead on price action levels and who indeed is in control, because these news releases, guys, are going to provide a whole bunch of volatility. Some traders love it, some traders hate it. We just need to kind of adapt to the current market landscape and the narratives currently at play. So in today's video, guys, I have a bit of an interesting one for you. Number one, we're going to take a brief look at our technical analysis rundown in terms of our major market sectors, see how they are shaping up after today's price action. Thereafter, take a look at some of our big tech names, see how the levels are shaping up there as well, whether or not there are some good deals to be had in big tech right now, or maybe is it a better idea to just simply wait on the sidelines. And lastly, I'll do something that I have not done in a very long time. We are going to review a few of the subscriber request tickers that have been in the comment section asking for a review over the last 2-3 weeks. This was a very popular thing that I used to do back in 2024. I used to do it once per week or once every 2 weeks, where I would go through the comments and find which stocks you guys wanted me to look at and give a 2-3 minute rundown of fundamentals and technicals. So I'm going to do that for just a few subscribers over the course of today's video at the end of the video. And I might just be bringing back the series as a whole. Maybe once every 2 or 3 Saturdays, I'll start doing again, because I know not a lot of people out there do that type of content, and I always like giving back to you guys for supporting the channel, of course, in terms of all your views, your likes, your comments, and everything in between. So should be a very fun video, guys, and should be a shorter video. We're not going to spend that much time on the technicals because not much has changed. So with that being said, let us dive right into it, shall we? So the SPY up a 0.15%, QQQ roughly flat 0.02, but the highlight of the day really has to be in the rotation that came in from our other sectors that have largely been left behind over the course of the past month. The heat map looks like this. Very decent participation from the bottom half of the market, and that of course has to do with the fact that yields kind of found a local top today and started curling over towards the end of the day on the 10 and starting curling over today as well on the 20-year yields as well. It alleviates pressure off of equities and allows some of these secondary sectors to start running a little bit. Big tech had a little bit of a mixed day, guys, but I'll remind you, 1 week, the chart still looks, the heat map still looks like this. Very, very, very mixed market. And on the 1 month relative performance, guys, everything everything almost still deeply in the red. So I would not say that after this tiny little 1 day's worth of bounce on the SPY and the QQQ that we are fully out of the volatility. There is still a ton of volatility catalysts on the horizon, starting on Friday with the non-farm payrolls jobs reports. So going to be a very big one. Next week, we have CPI. The week after that, we have Trump inauguration and all of the big tech earnings. And then the week after that, January 29th, we get Jerome Powell with a possible pause in the interest rate cutting cycle. So a lot of volatility from now until the end of the month, guys. And these news reports can be interpreted either way by Wall Street, right? It's going to be very tough to make sense of this. Very confusing market landscape right now, so we will purely focus on the higher time frames, who is in control of the price action, and trying to find very high quality companies at very good prices. It's the best thing we can do as traders in this market. If you're a long-term investor, the thesis is still the same, guys. Just DCA with every single paycheck into the highest quality companies or the highest quality ETFs that you have, and you should be sitting pretty in the next 5, 10, 15 years, of course, right? So moving into the SPY directly, guys, the SPY, not much has changed, right? We kind of bounced into support down here, 585 down to about 576, but not much has changed. No major levels have been broken. Pay special attention. Can we reset the hourly uptrend? That is step number 1. That will lead us into a daily bounce. And then you will have to take out the top of resistance here, 600 to set a new daily uptrend, smash through this resistance, 600 down to about 595. And that will allow you to potentially set the weekly higher lows in motion and go for the potential weekly trend continuation higher. However, with so many volatility catalysts on the horizon, guys, it's going to be tough for the bulls to get through there without some big resistance by the bears, of course. So pay special attention to that. In my opinion, January can be a very volatile month. I would be very surprised, guys, if the SPY marches on to new all-time highs. At least in the month of January, there's just too many volatility catalysts. You can have some very nice moves to the upside and then get 1 or 2 big red days, which just undoes an entire move, as we've seen so many times over the last 3 weeks. I'll remind you of the January seasonality, very rough and bumpy markets culminating in the end of the month of January, where it's the weakest period of time. Funny enough, the end of the month of January this time, Trump inauguration, big tech earnings, and Jerome Powell coming in with a potential interest rate cut pause. So all that being said, end of January, very, very volatile. Would not be surprised if we continue to see some very large moves in either direction as traders just get chopped up, get put through the washing machine. And I'm not going to be participating in that washing machine. I'm waiting for the big red days into the flush zones and then writing some short puts under the market at levels that I desire to play. But as of right now, we stay trapped on the SPY between 2 clear levels. Overhead resistance and below support, no clear trend. However, we have not lost the weekly timeframes just yet. The bull's still in control of that, but pay special attention. If you lose 580 on a weekly basis, that will be your first weekly downtrend in a very long time since last fall of 2023. And that would signal that we are in for a little bit of more monthly consolidation. So keep that in mind. My mantra, my slogan for the month of January, guys, is I'm hoping for the best. I would love to see the markets do this, but I'm expecting the worst and holding my buying power for that specific reason. I have a bunch of call options on, so don't worry about me. I will not be left out of the market if we do continue to rally. I have a ton of leaps, but in terms of the wheel strategy and deploying more buying power for weekly trades, I'm being very calculated and very patient with the degree of trades that I'm willing to take. Moving on to the QQQs, same analysis, right? Daily was a downtrend, but now we're kind of devolving into some form of a tightening range. The bull's doing a good job today of protecting 515 down to 509, but pay special attention, guys. We need to set the new daily uptrends. That would be a break above 527. Until that happens, you cannot say the bulls are back in short-term control. On the weekly, they have not lost any control whatsoever. Still looking for a weekly higher low. Anything above 482 is for that weekly higher low for possible further weekly continuation. But if the volatility becomes too much and the bears take over and we roll over below 507, that will be your first weekly downtrend on the QQQs in a very long time, since all the way back here in February into April. And that would also signal that we're in for a little bit more monthly consolidation end of January, early February, before possibly having a very beautiful period of seasonality, right? February, mid-February can pull back, but then March, April, May, June is really going to be the time for the bull market expansion to really take way, right? So QQQ, still a very mixed bag. I'm being very patient and selective on the companies that I choose to play in the technology sector. Moving on to financials right now, decent little update on financials, but you can see we have not broken any major levels, also somewhat in the form of a tightening range. Below us is a decent area of support, 47.70 down to about 47 flat. In the event we break through these guys, 47.90-ish, that would be new daily downtrend. That would also be further weekly consolidation, and you guys can see it best, right? This was always a weekly uptrend. However, now we set the weekly higher lows. If we bounce to only this local high, which is a very weak bounce for financials, only a 38% bounce, very, very, very soft bounce. If we were to roll over and cut the daily lows down here and start making our way down into this green section down there and flush these guys, it's not going to look good, guys. That will be weekly downtrend number one. We have not had a weekly downtrend on financials, guys, since fall of 2023, so it should be notable to us. And if that does happen, you guys know it best. We are heading into some form of monthly consolidation, a little bit lower, in my opinion, probably 45 down to about 44, coming back, touching the 12 EMA, a little bit of a touch, and possibly rally for the rest of 2025. So that is how I see it, guys. There's so many volatility catalysts on the horizon for January. If we were to continue into monthly consolidation, look at these candles, the December candles, right? It shows that the bulls are getting a little bit tired, and the bears have all the runway in the world to set up for these monthly higher lows during January, during February, when the volatility is at its peak. They have all the excuses in the world to send these markets down. And as I said, if you take a time machine, if we fast forward to June, where we expect the markets to rally higher, would higher lows in January and February, would something like this make sense? It wouldn't look that bad on the charts, right? They have all the possibilities to do it over the course of the next month, month and a half. So pay special attention to those levels and that price action and who is in control. In terms of control, speaking about control, this is the XLV healthcare sector, setting up a very nice daily uptrend. This is step number one of what we want to see. I'll remind you of the context is a big weekly downtrend at this current time. We're currently trying to find a local bottom and support 140 down to about 130. That, I'll remind you, is the previous highs of resistance for about a year and a half's time between 2022 and 2023. So very large support area for the bulls. However, you cannot ignore the fact that we've lost all the momentum, right? So daily uptrend right now on healthcare is very good. However, in the context of the weekly, we are just looking for a lower high. Then it's up to the bulls to prove to us, can they reset to the weekly uptrend and put an end to this monthly consolidation that's been happening since the month of September. It's been one of the more weak sectors right now. And in terms of the size of the bounce, I'm still not satisfied with the size of this bounce, guys, only 38.2. So if the bulls forfeit the daily uptrend here and roll back over with such a weak bounce on the weekly, what do you think is going to happen? Well, most likely we're going to revisit the lows or possibly even lower. So I'm probably not playing any healthcare names whatsoever leading into Trump's inauguration and the into the onset of his new policies potentially. But one of my Discord members did point out some very decent charts in terms of healthcare. And these are some companies that don't really stand to be affected by the Trump administration policies too much. That's number one, Johnson & Johnson, coming into a very solid area of support. You guys can see it best, right? On the monthly, this is like 2 years worth of consolidation. Buy here, sell here, pretty much with the stop loss below. Decent trade opportunity, but a lot of headwinds for the sector as a whole. And the second one, of course, is TMO. TMO, same concept. Entry here, stop loss goes below the support range, which is a roughly 2.5-year support range as well. And you're targeting the all-time highs for pretty much your take profit zone. So there is some decent risk to reward to be had in healthcare, just not one of my favorite sectors to play right now because of all the possible headwinds and uncertainty that we may see on the sector in the next month, month and a half. Moving into semiconductors right now, semiconductors down about 0.71, but we knew after yesterday's momentum down, that was probably going to be the case. A little bit of further continuation and the gap fill from the Monday, or rather from the Friday to Monday open, right? That being said, daily uptrend is nice right now, getting rejected still in this area, 260 down to 250, and the bulls are no stranger to being rejected here. They have been rejected now for pretty much the last, 4 or 5 months in a row. So until we can close a weekly candle above 260, I will not close this box green, and we cannot say that they have really gapped above and can use this area as support. They never really broke through it. They're still kind of getting stuck into it. That being said, daily uptrend is nice. We will see, can they convert to further daily uptrend continuation and start closing a weekly candle above 260. Until that's the case in point for the bulls, I'm not going to give it to them. Semiconductors are still going to be volatile. I think they'll have a beautiful 2025 as a whole, as people realize that the growth of the sector is indeed coming back after being muted for roughly the last 6 months in a row. So not looking too bad, but I still remain firm on wanting to play the best companies of the entire sector, which in my opinion right now are TSM, AVGO, and NVIDIA on some pullbacks. There's a few notable shout outs, of course, to companies like ASML, companies like Micron. We know that all already, right? But until we see a broad market sector rally for semiconductors, I'm still only playing the highest quality names out of the bunch, right? So that is the case in point for semiconductors. We will see if they can follow through. And if not, if they give it all back, well, I guess we're just going to be coming back to being trapped in the same area that we've been trapped in for the last 2 months, which is between resistance and below support, which is going to once again open up some opportunities for me to write some short puts below the market on some of my favorite companies, which I've just named previously. Moving into IWM Russell right now. So the Russell, even though rates were coming slightly, they were curling over today. I wouldn't say down, they were curling over, right? The Russell's still not responding too favorably, right? So the Russell's still kind of trapped. Looks like semiconductors. We are trapped between two ranges right now. Trapped between overhead resistance, 231 down to 225, and trapped above below support, which is pretty much 217 down to about 208. Until one of these two levels is broken either which direction, very tough for me to position. I cannot buy here into resistance. I would love to see the breakout, retest, and then run. This would be the entry. Stop loss goes here, and then we target the all-time highs. That's just how I trade. I'm waiting for confirmation because the other flip side scenario is rejection here, coming into weekly lower lows, and this is where I might position for some support levels down there. All in all, the IWM remains somewhat directionless on the short-term daily. You would need to either see a flush of the lows here, 218, daily downtrend continues, weekly downtrend continues as well, and then we can look for maybe some basing of support down here and possibly some entries further down below as well. Or flip side, you need to see the daily uptrend, but I will not be convinced. You will not see me take a trade here into resistance. If you want to take the trade on the IWM for the breakout, I need to see the breakout, the retest of this as support. Entry is here, and then we go long, the stop loss goes there. TP1 is the all-time high, and then TP2, of course, you can start setting them a little bit higher. Those are the two types of trade setups that I would be looking for on IWM. Really nothing much as of right now. The trade right now, guys, is just a hope and a prayer that we can pull back above here, but until you get confirmation, the bears can just set the lower high and then flush for the lower low. Just keep that in mind because we do not have the weekly uptrends anymore. We lost them when we lost these lows right here. Moving on to the Dow Jones now. Lastly, the Dow Jones. Dow Jones, not too bad of a day today, 0.25%, but this one looks exactly like the Russell, looks exactly like the value sector as well, right? Just lack of participation from the rest of the major sectors. One day is fine, but you need to see some follow through from all of the other major sectors that have largely been left behind over the course of the past month of trading, where big tech has held up the market as best as they could, but you can see a lot of damage was done on the bottom half of the market, and that is why the Dow Jones still looks like this. That being said, trying to establish a base of support, 42.6 down to about 41.9 is going to be the area the bulls are looking to protect, but very weak, right? Somewhat of a tightening range at the lower end of a drop, not something that shows me the most confidence by the bulls. But that being said, the weekly is not looking too bad. It was a weekly uptrend. We lost the higher lows by losing this low right there. So not looking too bad. The bulls are playing very good defense around the 26 EMA. You can see they've defended this area, the 26 EMA rather, a very good amount of times since the rally started late 2023. If they lose this, however, guys, pay special attention. If they lose these lows and start flushing, that would be the first weekly downtrend that we've had in a very long time, once again, since fall of 2023. And I'll remind you, the context of fall 2023 was exactly the same thing. Rates higher for longer, and inflation was curling back up, and people were saying perfect, or not perfect, but unfortunately, we're going to have a second wave of inflation, and that's why we were sent into perpetual weekly downtrends down there. Could this be the same during the month of January with uncertainty around Trump and his policies, uncertainty around the Fed's interest rate cutting cycles? Absolutely, guys. So expect, as I said, hope for the best, but expect the worst. If the Dow Jones curls down here, it could free up some very decent opportunities. And I'll remind you, we would just be looking for some further monthly higher lows for further trend continuation. That's why I say this area down here, 41.3 down to about 40,500, lines up with the 12 EMA and the monthly 12 EMA. We have not lost that often in the context of the Dow Jones, especially in a bull market, but it would look very normal, right? Retest of the 12 EMA. rally for a good portion of the first half of 2025, it would look perfectly normal. So I'm not going to give this one to the bulls just yet until they prove it to me that they can break 43,100, set up the new daily uptrend, go for it, and then we will measure the size of this bounce on the weekly, and can they recapture the weekly uptrend in 2 steps? Because at this point, guys, the V-shape, after such a big drop, the V-shape, especially on the Dow Jones, is somewhat unlikely. It does not move like that. It's not Palantir, guys. Usually you're expecting a 2-stage recovery process for the weekly time frame. And that is everything for your sector analysis. Hopefully you guys appreciated that. We will do the rest of the sectors when we do the Friday recap, where I go a little bit more in detail across all the other major sectors as well. We will also touch upon yields the next time. We did a big review on yields yesterday. So if you want to see my review on yields yesterday, just go to the video yesterday. The link is in the timestamp is in the description for yields. So we'll skip over those for now if you do allow me. In terms of crypto also had a relatively bad day today on Bitcoin as well. Even though we peaked below here, we were down about over 4% on Bitcoin during the day. But you can see, guys, this is kind of like semiconductors or like the Russell or things like that, right? This is a risk on sector as a whole. And now we are trapped between 2 levels, trapped between overhead resistance 101.5 down about 98, and trapped above below support, which is 91 down about 87. So what I'm looking to do here is whenever Bitcoin has a big drop down into this region, I'm looking to buy the dip. How am I buying the dip? I am writing short puts under the market to the bottom end of the support, because I don't mind Bitcoin down here, buying Bitcoin down there. But if it doesn't get down there, I'm collecting some very juicy premium in the process. I have enough Bitcoin in my long-term portfolio, guys. I do not want to be or need to be adding any more up here. So for now, just some slight swing trades for me. Directionless on this one as well. Trying to go for the daily trend change, but with such a steep pullback, guys, in my opinion, it's going to be a 2-step recovery process, as we've seen Bitcoin try to do many times in the past, right? Where you have a nice move up into resistance, get rejected, and then you see it takes sometimes multiple steps. They don't just V-shape all the time, right? So this is going to be another case in point where I do still think the 2-step recovery process is likely. And if we do go a little bit lower, I will be writing some more short puts on BITX below the market as low as I can go. But as of right now, crypto is still relatively muted, not only for Bitcoin, but also for Ethereum as well. Same concept, but a wider range. Trapped below overhead resistance, 38, 39, let's call it, down about 37, and below support, 32, down about 3,000. I don't mind buying a little bit of Ethereum down here. But my optimal location, I'm not saying we're going to get it, but my optimal location to buy Ethereum is below 3,000. 3,000 down about 2,700, would not mind at all. And the way that I'm doing that is I'm writing short puts on ETH-U all the way down here at $6. It might seem far away, but that is just where I want to buy Ethereum myself. And that is where I think that I can get the best deal and the best pricing for it. All that being said, complete loss of daily momentum, that is clear as day. So once again, this is going to be a case in point where Ethereum may just have to 2-step process into resistance. Maybe the V-shape is somewhat unlikely. Tough to say by now, but if we do pull back a little bit more, I will be nibbling a little bit more on those ETH-U contracts by the intermediary of writing short puts. All in all though, guys, Bitcoin dominance still looking like Bitcoin is king right now. Let me just put it on BTC.D. So Bitcoin dominance, you can see, guys, not much progress in terms of the altcoin rally, is there, right? Seems as though every single time we make a little bit of progress, it gets erased in one single day of trading. Welcome to the month of January, where it's going to be very volatile the entire month, in my opinion. I think that Bitcoin and the rest of the market here in crypto can move higher, but it's going to require some more clarity on policy and just going to require less volatility as a whole in the market, less uncertainty, right? You guys know crypto can run, but crypto needs a green light from everything, from no macro concerns, no volatility concerns, no push and pull between market narratives, recession, no recession, inflation, no inflation, high yields, high dollar. You know what I mean? It's just too many things acting against crypto right now, in my humble opinion. So pay special attention as to, can we get the weekly declines on Bitcoin dominance? That will be the signal that the altcoin rally is now underway. If we can start challenging some of these lower 55, 54% range and start going into a Bitcoin dominance weekly downtrend, something we have not seen in the last 2 years. That's a very quick rundown of crypto. I promise I'll do a little bit more on Friday. Now I want to fly through these big tech names because then I have some subscriber requests to get to. So Apple still remaining a little bit weak. Of course, we know the context is now a daily downtrend. And we know also the larger context is just a weekly, very healthy pullback. 6, 7, 8 weeks of rally in a row. Eventually you are bound to pull back, especially when you're weekly overbought conditions on Apple. Once again, it's not Palantir. It does not stay weekly overbought for that long before coming into a pullback. That being said, one of my favorite trades possibly open up, the breakout, the retest of prior resistance, which is now support. That That is sitting currently 237 down to about 230. If we do retest this level and find a local bottom, decent opportunity to write some puts below the market, 230, 225 for a possible just collecting of premium before we can get a little bit of a bounce from that resistance level. So Apple not looking the worst. One trade opportunity is freeing itself up very soon if we are patient enough to wait for it. All in all, Apple's not looking too bad. I'm not selling any of my long-term shares, but I'm definitely not buying any more long-term shares up here just because of the valuation, right? Right now at about 242, the peg should be sitting at about 3.4, which is very high for the growth of the company at its current stage. I love Apple as a stock. It's just the valuation right now, a little bit too expensive for me to be adding any meaningful long-term shares in my portfolio. I DCA into all my companies every single month. So Apple does get about $150, $200 by me every single month with the rest of my portfolio, but I'm not adding anything with size. I'm just kind of DCAing every single month, similar to what I've been doing for the last, 6, 7, 8 years at this point. So that being said, that's the trade opportunity that I possibly see on Apple coming down into support, which was previous resistance. If we can line that up with a little bit of slightly daily oversold conditions, I think the recipe for a trade down there looks quite nice. Moving into AMD right now. Unfortunately, AMD coming undone today, 4.31%, and that's what I was saying in yesterday's video and even in Monday and Tuesday's video as well. I was saying that a daily uptrend is very nice, but until you can prove to us that you want to recapture a lot on the weekly time frame, the bears can just roll this over because the context has always been a weekly downtrend. So any pop, guys, you have to realize it is always for a lower high. Now, depending on where they set the lower high, gives the bulls a better chance than not of resetting this into a new weekly uptrend. But if you get somewhat of a shallow bounce, like we just saw on AMD before losing the daily, look how high the weekly got. 50%, guys. That's literally 50-50 odds of the bears rolling over or the bulls recapturing. So you do not have most of the odds in your favor. That only comes into play when you get to the 618 or the 782, which is what I was saying. I need to see AMD push at least to 135 all the way up to about 140 to give the bulls the best chance of resetting this into a possible new weekly uptrend. Unfortunately, today, one day of price action has undone all of this rally right here. It is still, technically speaking, a daily uptrend. We have not lost the lows at 119.41. But it's not looking the best, right? The bulls need to get their butts in gear with some very big green days over the next few days. If not, we may just stay kind of trapped down here. And if we stay trapped down there for too long, guys, with a weekly time frame looking like this, a weekly rollover for AMD is looking very likely, just weekly downtrend continuation at that point. Next level of support is down here, 115 down to 100. This is going to be the area that I'm going to be looking to add to my AMD positions. I have one very small AMD position right now, but I would not mind playing some short puts in the lower levels and even adding to some possible some leap call options because the valuation down here is very good. The risk to reward profile is good, but notice I say risk to reward. It is not a riskless trade. There is some risk to this trade right now. The valuation is very good. The thesis for expansion is also very good. I'm not saying they're going to rival NVIDIA. That is not going to be the case, but can we see AMD come back to its fair value, which in my opinion is roughly between 140 and 150? Yes, that would be fair for the company, right? And the growth in EPS and the growth in revenue over the next 3 years would also support that valuation. So I'm just looking for a little bit of mean reversion, but this one is going to need some broad market performance from semiconductors as a whole to kind of carry it up and get the bullish sentiment back into the brand. Now, taking a look at number 3, which is going to be Amazon. Amazon roughly flat on the day, so nothing really has changed at all. This one really looks like the SPY, but at a higher level. It looks like the SPY or the QQQ, right? You see this sideways consolidation? Amazon looks almost exactly the same. That's not Amazon. This is Amazon. So looking at Amazon right now, same concept, guys. We are looking for the bulls to recapture the daily uptrend, but that will only happen if we break 229. Break it to the upside, perfect new daily uptrend, and then perfect as well. The weekly higher lows are set, and you're looking for another weekly leg higher, possibly this time heading to the 240, maybe even 250 range. But it is not in the bag for the bulls just yet. It is a very mixed chart right now. So you have two levels. This one for the new daily uptrend, which gives you a confirmation that the weekly lows are set. Or to the flip side, unfortunately, would be a flush of 219. Flush 219, you get the daily downtrend, guys. And unfortunately, at that point, it would be a weekly downtrend for Amazon. Ooh, weekly downtrend. It sounds more serious than it is, right? Weekly downtrend could send us into 215 down to about 207. Weekly downtrend would just be monthly consolidation. Amazon's had a very nice last 4 or 5 months, but one red monthly candle and even early February, something like this, reset a little bit lower, closer to 200, and then rally through 2025. Would that look so awkward on the chart? No, it would look perfectly healthy on the chart, right? So just keep that in mind, guys. Amazon still strong, still has not lost the levels, but as with every other company on this list, guys, we are hoping for the best, but we were expecting the worst, and I will be expecting, if Amazon comes down here, to write some short puts on this favorite stock of mine. Below 207 to 205 will be the short put entry for me. That being said, the valuation for Amazon right now at 220 is very fair. 1.65 peg, not the best, but also not the worst. I think the valuation is very fair and could lead to some expansion into 2025. 240, 250 could be a very decent price target for the company over the next 3 to 6 months. Moving into Google right now, down about 0.67%. Not the worst day for Google, but then again, not the best day either, right? And this as well, same as the QQ, is kind of trapped. We know they do have the daily uptrend contrary to some of its sector peers, but that being said, it's not looking the strongest, right? Constantly getting rejected at this 200, cannot close above. Daily uptrend is set where we're going to be looking for the bulls to set a higher low. Anything above 188, looking for the higher low for possible further trend continuation. And the trend they do still have. It is still a very nice weekly uptrend right now. Weekly lows are set, kind of like Amazon as well, but pay special attention. This is both a daily higher low and a weekly higher low. This 188.50 guy is very important, right? Flush this, you lose two things. You lose the daily, but you also send us into a weekly downtrend, right? Equal high, arguably lower high, into lower low. That would be weekly downtrend. Once again, weekly downtrend, big scary term, right? Not so much, just for monthly consolidation. Beautiful months of rally for Google. A little bit of a month of pullback or two would not hurt anyone. And I will be sitting down here in the mid 180s with some short puts and possibly even adding some new leap call contracts for June 2026 if we do revisit the lower 180s. So this is the exact trade location I'm looking for on Google. 185 down to about 175, that juicy little pocket down there. I will remind you the thesis for Google is they are still one of the very cheapest companies in the entire Mag 7. Even at the all-time highs, guys, 1.43 peg. That is very cheap for a company like Google. Moving on to Meta right now. Meta down about 1.16%. Oops, that's not the right click. That's not the right button. So Meta also in the context of still a nice daily uptrend, rejecting nicely from the moving averages, clawing back a lot of the damage that was done early morning. And the bulls are trying their best, right, to continue this daily uptrend into new all-time highs. That being said, need to crack above 633 to set those new all-time highs and give us that weekly extra leg of momentum the bulls have been waiting for. We are trying to set up a new weekly uptrend, but we will only have confirmation of that if we break through the all-time highs. The rollover would be not the worst case for Meta. If we roll over 581 below all of this support below us, you would forfeit two things. Number one, you would forfeit the daily uptrend, of course. And number two, unfortunately, you would forfeit the weekly uptrend, send us into a bit of a weekly downtrend similar to what we have back here. And you would just be going into a little bit of monthly consolidation, the bottom end of which, in my opinion, is down here, 540 down to about 630, lining up with 12 EMA on the monthly. This would not look so bad for Meta if they put in a red January and early red February as well, and then have a nice end or midpoint to 2025. It would do wonders in cooling down this monthly RSI as well. It wouldn't look so awkward, right? It would look exactly like what Meta does sometimes, like when they consolidate here, another leg higher, consolidate, another leg higher, consolidate, another leg higher, right? So that's what I'm looking at on Meta specifically. As of right now, though, no red flags. If anything, it does look ripe for continuation. However, you guys know, with so many news and macro events over the next few weeks, it doesn't matter if Meta looks good. Any red day on the market could just completely erase this price action, which is why I'm focusing mostly on the weekly timeframes across all of these charts. Moving on to Microsoft right now. Microsoft still a little bit weak today, 0.52%. Daily downtrend is the context for Microsoft. They are trying desperately to protect this area of support. Prior resistance, newfound support for the bulls, and you can see they're trying desperately to claw onto this area with their lives. That being said, the daily context is a downtrend, nice daily bounce. This is what I mean when you have a nice size bounce, right? The bounce came all the way up to almost 75%, decent size bounce, but it does not guarantee you anything. Just ask the SPY. SPY also had a 70+% bounce and rolled it over nevertheless. So Microsoft also, the size of the bounce is good, but a bounce is step one. Step number two is you need, so I'm trying to type without looking at my keyboard. So in front of the microphone as well. So what you need is you need the daily uptrend confirmation to prove to us, okay, the weekly higher lows are set. weekly higher lows and going for possible other leg of weekly expansion. So far, they have not done that. That would be a break and close above 434. As of right now, we're still trapped in the same price action we've had for the last few weeks. And to the downside, of course, is 415. Retest 415. That would be possible daily downtrend continuation. Good thing for them, there is some decent support down here. 415, roughly down to 410, this little pocket. But the bigger one, of course, you guys probably know this by now, is down here 405 to roughly 390. If we come down on Microsoft again towards 415, 410, I will be gladly writing some short puts on Microsoft down below here for approximately 30, 45 days of time, pocketing a ton of premium and looking to buy one of my favorite companies at a level of support that's been there pretty much all of 2024. So Microsoft's not looking too bad. It still does have a chance to recapture. I'm just saying if ever it doesn't, I will be sitting down here for some trades, one of my favorite companies in the market. Moving into Netflix right now, Netflix down about 0.48%. I mean, Netflix has just been weak, right? Daily downtrend is clear as day right now, slightly below the moving averages. This is the first time they've been below the moving averages since prior to earnings pretty much, but we know why, right? Netflix has had a tremendous rally since their last earnings, 4 or 5 months of straight up, and you can judge by this monthly time frame what we are potentially embarking into, especially with monthly overbought conditions, guys. We're probably going for some extended consolidation, which is not a bad thing. The company's run a lot. The fundamentals of the business have not changed at all in the last 5 weeks. It's just stocks. They just can't go up in a straight line forever. Eventually, you do get some consolidation, right? So a weekly uptrend is very nice right there. We're looking for the weekly higher low. At this point, anything above 743, looking for a weekly higher low. But if you get a pop and then drop, that would be a weekly downtrend, and that would hint that we're due for a little bit more monthly consolidation. Monthly consolidation could easily take us back into the 800 to 750 range. Tag the 12 EMA, which would be extending all the way here. You guys see, Netflix does this all the time. Several months of rally, big pullback, several months of rally, big pullback, touch of the 12 EMA. Once again, several months of rally could be due for a January and maybe even early February pullback before resuming on its very nice uptrend. Netflix is crushing it right now, guys, not only in streaming, but also their new business, which is sports streaming, absolutely crushing it. Nobody's ever going to catch Netflix. Still one of my favorite long-term portfolio companies. It's just right now, it is a little bit rich, admittedly. So at that point in time, if it comes down 800 to 750, I may be looking for a cheeky little trade right there, but as of right now, I'm not feeling impatient whatsoever. No FOMO on my side. Moving into NVIDIA at this point in time, give me a very brief moment. So NVIDIA down about 0.02%. I mean, not the best day, not the worst day for NVIDIA, right? They were down a little bit, they were up a little bit, then eventually they ended kind of right in the middle. So very volatile day for NVIDIA, but they did fill the gap from the Friday to the Monday open. Not looking too bad. This looks exactly like SMH, does it not? Well, because NVIDIA has a very big weight, it looks exactly the same. Trying to break above on a resistance level and just getting shot back. NVIDIA, exact same thing. Nothing bad happened yesterday, as we said, guys. Normal volatile price action. Tried to break above the all-time highs, couldn't get it done, and now you have the big pullback. That being said, who's in control? The daily bulls are in full control of this chart right now, covering the gap and also reacting nicely from your daily short-term moving averages, 12, 26, and the 50. So we will see, does NVIDIA have it in the bag to kind of test this area? I will turn this area back to red. Not too sure why it was green to begin with, but it is indeed overhead resistance, right? Which is classic 141 up to about 148. Really need to clear that in a big way if you want to see the bulls march higher and start gaining the levels. On the weekly, not looking too bad. It was a weekly downtrend, beautiful weekly engulfing move. And now, even if they do give this whole move back, guys, and set up the daily downtrend, which is always a case, can bounce into here, get rejected, daily downtrend, understand what they're trying to do on the larger time frames. The weekly lows are here, 126. Any move lower looking for a higher low above 126 and try and finally go for the weekly trend change. If they cannot get it done in this candle, we'll be looking for them to do the two-step process. All in all though, guys, if NVIDIA does somehow come back down here, 130 to 125, anything's possible in January, guys. Anything, trust me. If we come back down here, and we'll be looking to write some more short puts in the mid to low 120 range. This is the next support. Come down hard into here. It will definitely open up some strikes down there, which is my preferred level to be adding to some NVIDIA right now. 125 down to 115. Very nice pocket down there. And at that point, that will be a sell-off from the highs to the lows of about 20-25%. I'm definitely buying more NVIDIA if it comes down there. As of now, just being patient. I am playing a little bit short puts down here, 130, 125, but my actual level that I want is more 119, 115, right? All right, moving to the next one, which is going to be Tesla. Tesla up about 0.15% today. Not the best day for Tesla, but then again, not losing any major levels. We know the context has been this daily downtrend. The bulls had a decent bounce, guys, but that's all it is. It was a decent bounce, 50% bounce. So the odds are 50-50 for the bears to be able to flush this through to new lows, or the bulls' capacity to reset this into a daily uptrend. They're quickly running out of runway, however. The lower end of support is down here, 377. So the bulls need to get their act together. And if you want to see this daily uptrend shift to the upside, right? Watch the hourly timeframes, guys. Need to get the hourly timeframes back first. It lets you know the daily higher lows are set, and then you watch, can they break this level, or will they just get rejected and plunge back down, right? Very tough for me to position on Tesla right now. Why? Because it is weekly consolidation. We know they had a tremendous rally. Weekly uptrend was clear as day. Now we have the weekly pullback and somewhat of a loss of momentum. And it's very possible that the loss of momentum continues to persist during the month of January, as the month of January is going to be very volatile, as I've said 5,000 times so far. And they also do have earnings coming into the end of the month. We know that deliveries came in slightly light. It's going to be very curious. It's kind of ruined a little bit of the sentiment around Tesla, at least the hype and the momentum. I still love the company, guys. It's still in my long-term portfolio, but I am waiting for the absolute flush. If they do flush this zone, even though we are still holding relative support, right? We are kind of weak right now. The lower support range is down there, 377, as I said, prior all-time high resistance, down to support. And if we do pull back, guys, I think we're going to probably test the 12 EMA, 367. If you pull back down into the 360s, it's going to open up some nice short put opportunities, maybe even the 350, 330 range. And that's why I'll be looking to pick up some Tesla myself. If I'm looking to play, to sell any options on this company as a whole, I think it's the best thing you can do with this one, because predicting short-term price swings amidst a very volatile month like January, guys, is going to be very, very difficult to do. So in that case in point, I would rather play it safe and play some short puts in the lower range down here, 350 down to 330 if it opens up. We can even play some TSLL, which I've been playing for a few weeks running now, and I like 23 all the way down to roughly $19, as low as we can get. That's just 2 times leverage Tesla. If you don't have all the buying power to play a full 100 shares of Tesla, you can consider some TSLL. Just be very careful and cautious on that one, guys, because it is 2 times leverage. So all in all, not looking the worst, but could we also see this, if this weekly consolidation continues, or maybe even a weekly downtrend manifests? Could this be monthly consolidation for Tesla? 3, 4, 5 months of nice rally, monthly higher lows being set over the next month or two, and then possibly rally into the rest of the year? Yes. And that's why I say, hoping for the best, but expecting the worst, which is why I'm going to be sitting down here patiently waiting for my strikes. Moving on to Palantir right now. Palantir down about 2.51%. Palantir has now done something that they have not done in a very long time, as I was saying yesterday. Well, number one, we have lost the daily uptrend. We have not lost the daily uptrend on Palantir, arguably since here, but here was equal lows. Truly, since August of 2024, have we not lost the daily downtrend in a meaningful fashion. That being said, we did test the 50 EMA, and the bulls did play a little bit of defense right there. I will remind you, however, in the context of a daily downtrend, we are anticipating a lower high. And what is above us right now, unfortunately now above us, stands this area that used to be support, which I will now turn red, which is now going to be resistance, talking about 70 up to about $72. It was support for the market for a while. Now it will be acting as resistance. So can we possibly see a scenario if the markets remain somewhat tumultuous, somewhat weak, lower high into lower low? Yes, very possibly. And the next stop for Palantir will most likely be that round $60 mark. And that is what I'm waiting for personally, guys. I've been waiting for this trade for a while, just waiting for the weekly higher lows to be set. It has a very fantastic rally since pretty much their last earnings and the election cycle. Everybody got super bullish. Everybody was buying the tops. And now people are wondering if the thesis is still valid. The thesis is still valid, guys. But if you guys were buying up here, you did not get the best price. Let's just call it how it is, right? We were buying, well, not me, but unfortunately, some of you guys that were buying here, I mean, how much more juice do you want to squeeze out of the lemon, right? There's not that much more meat left on the bone. Weekly overbought conditions for how many weeks in a row? 8, 9, 10, 11 weeks. It's usually not the best opportunity to be buying these things, but if you are interested in buying Palantir, possibly a nice opportunity going to be freeing up soon if we do flush the 12, which we have not really lost recently. Could be a little bit of a bounce from here, but if weekly consolidation continues into a weekly downtrend through the month of January through February as well, look at these candle formations. This is January for now. A lot of trading to be left in the month of January, of course, but if we close the candle like this, what do you guys think is going to happen? probably more follow through the month of early February as well. That's why I'm looking at $60. The 12 EMA is not going to quite catch up just yet, but if we come down to 60 bucks, I'll be looking to write some short puts. 55 down to 50, volatility permitting. I would love to find that area back on Palantir again, but I'm in no rush for this one specifically. I will remind you, I am still a long-term Palantir bull, guys. I still have my shares that I bought with an average cost of $11.85 roughly, all the way prior to that, all the way back here. I bought from after the IPO, DCA'd through the entire bear market. My cost basis is now about $11.85. My lowest purchase was like $6 something, guys. I'm riding some of these shares. I have not sold all of them so far. I am with you, but you have to see it how it is, right? The stock has run a ton. Now it's time for a little bit of a pullback. Monthly is still overbought. If we can cool down the monthly and the weekly a little bit further through January and February, I think it'll be a healthy dip for Palantir. Moving on lastly to SOFI right now. So SOFI down about 2.41%. Not the worst day for SOFI, but still no clear price action. Still in the context of a daily downtrend. This kind of looks like Tesla a little bit, right? It looks like all the hype plays right now. They all look exactly the same. Tesla, daily downtrend and weak little bounce right here. Not too sure if you're going to get the follow through or the daily trend change, right? Palantir, arguably looking the same. However, we have not had the little short-term bounce. And now SOFI, another one of the high-flying momentum stocks suffering the same fate. So this one kind of looks like Tesla in the respect that they're trying desperately to hold on to the last semblance of support, which ends at about $14. Below $14, guys, there's really not that much until arguably 11.50.11. So watch out to the downside if it does break, guys, especially if the SPY and the QQQ go into big sell-off mode. What do you think is going to happen to SOFI? SOFI is going to drop like a rock, right? It's run tremendously over the past few months, but as with Palantir as well, eventually you do need to set the monthly higher lows, which is a very healthy price action process for the markets. That being said, daily downtrend in motion right now. And arguably weekly downtrend as well, which is monthly consolidation. You can make an argument that, this is just one form of weekly consolidation. But then again, guys, they did set the daily downtrend, right? No daily downtrend here just yet. It was a sideways range. Now with the daily downtrend, you kind of have to call it how it is. This is a weekly downtrend as well, and it is a form of monthly consolidation. I am still playing this one. You guys know I'm long SOFI. I have 100 shares at 15. My average cost on those now with the covered calls is down at 13.60, and I'm leaving the door open. If SOFI really starts flushing the levels quickly, coming down to 13.12, that's where I want to DCA. $13, $12, $11, all the way down here into that 11.50 pocket. If we do, I think that's going to be max pain short term for SOFI, and that'll be a big pullback, guys. But you guys know these stocks can pull back hard and then still manifest a very big rally thereafter, right? So that being said, that's just how I'm playing SOFI, but I'm already in. So if it does go to the upside, I do not mind because I'm already in, right? I'm just saying if it comes down a little bit lower, I'm going to be DCAing the entire way, looking for the monthly higher lows and going for the monthly trend continuation. I do still think that SOFI can achieve a price target of $18 to $20 sometime in 2025, but the next month and a half for the markets overall may be a little bit bumpy, and you may see a lot of these high-flying momentum names start to give back a lot of their gains. That is everything for the market rundown, guys, and if that was all I was doing in this video, that would be pretty much the end of the video. So was okay on this one. 46 minutes, not too bad. I'm getting better, right? That being said, we have a few other things to look at. And number one, before we get into the subscriber requests, I wanted to make some quick commentary on what happened with quantum computing stocks, guys, and why when everybody was asking me in the nobody asks me about these stocks when they're down here. But when I get so many comments asking me about quantum computing stocks after they've ran 10x, you guys are usually a top signal. I'm not going to lie. I hate to say it that way, but you guys are usually Wall Street Bets' exit liquidity at that point in time, right? They're all early, massive call options, massive short squeezes, massive delta hedging by the brokers, buying shares to hedge all the calls that are being bought. And you guys know the rest, right? This happens so many times. Earlier this year, it was the rocket stocks, ASTS, Rocket Lab. Thereafter, that was the flavor of the month, right? Throughout the summer, thereafter came the nuclear reactor plays, the plays like SMR, right? Plays like that. They had their phenomenal rally. Right, this one as well, this one as well, this one as well, VST, which is still up there as well. Everybody was playing the nuclear plays, right? And then came along the quantum computing plays, and everybody switched to that flavor now. And then unfortunately, there was a souring of this trade yesterday by none other than the Elon Musk of semiconductors himself, Jensen Huang, right? So quantum computing stock sink as NVIDIA CEO delivers a reality check. And when I was asked about quantum computing stocks many times on the channel, guys, I had this thesis as well. I was telling everybody, listen, none of these companies make any money whatsoever, and they will not make much money at all before 2027, all the way through 2030, if at all, because those are only projections, right? That being said, Jensen Huang did say it would take 15 years to get very simple quantum computing, guys. And you guys should know this. If you're investing in quantum computing stocks, you should be at least doing about 10 minutes, 15 minutes of research on YouTube. And any industry expert would tell you guys that quantum computing sounds like a very innovative technology, but it's not new stuff. Quantum computing, or the idea or the working on quantum computing, has been around since the 1990s, guys. And it's always been the same thing. The power consumption is too high, the cooling requirements are too high, and the amount of computational errors that are made by quantum computing relegates them to very, very simple tasks. And Jensen Huang understands this very well because NVIDIA works with every single quantum computing company out there because all of them need NVIDIA's technology to run some software on those quantum computers. So here's the furtherance of what he had to say. That would probably be an estimate on the early side, being 15 years, said Jensen Huang. Now, he also said a 30-year estimate is probably on the late side, and he continued saying that 20 years seems more believable. Not quantum computing, guys. Quantum computing sounds like a fancy word from Star Trek or something like that, right? But we're not there yet. We will be there one day, but we are not there yet, guys. It requires too much power, too much cooling, and is way too prone to errors because you're using waves. You're not using the binary computing system that we're used to. Now, what's going to happen before quantum computing, guys, is supercomputers. Supercomputers are far better at executing complex tasks right now, and they're a lot faster and they're a lot more easier to manage in terms of troubleshooting and power requirements, efficiency and cooling requirements, et cetera, et cetera, et cetera. But now you guys will probably understand this if you watch some detailed videos on the matter, right? All the industry experts will all tell you the same thing. So playing these stocks was just wishful thinking and hype and momentum largely. I'm sorry to say, but it's just the fact of the matter, right? I can get behind some good momentum plays and some good hype plays as well, guys. I don't mind. I love playing these as well, but you have to realize you're playing the casino, right? This move is not real. This is not institutional money coming in and saying, "Oh, we have to get a piece of these quantum computing stocks, guys," right? None of these companies have any revenue whatsoever. Look at them, right? Deeply unprofitable. Where's the revenue? 2025, they're making $1.5 million in 2025. What's the market cap before today? It was almost $3 billion, guys, for $1.5 million in revenue. That's how you have to understand that these moves are way, 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 way overdone. Now, is it a decent opportunity? You guys want to play the dip right here and play? Sure, okay, but only invest what you're willing to lose, guys. I'm not saying these plays are done. It's possible they're done. I wouldn't be surprised if they were done, but you can possibly see some follow-up rallies after this dip, people loading back up on call options after getting destroyed by Jensen Huang and playing the rally. But just use stop losses, guys. Stop losses here, right? 578 should be the stop, and you should be targeting the previous highs. That's it. That's all. Just play the price action for what it's worth. Do not invest more than you're willing to lose. And definitely don't embark in the hype and thesis and get wrapped up emotionally and start telling all your friends, have you guys seen the quantum computing stocks? It's the technology of the future. They're going to put Google out of business. Doesn't work that way, guys. Don't get ahead of yourselves. Play these for what they are. Hype and momentum alone. Do not overstay your welcome. Set stop losses, set take profits, and please respect them. Do not get carried away by these momentum trades. It goes with this one. It goes for this one as well. It goes for Rigetti Computing. All the ones that you guys have possibly been playing, guys. It is all the exact same thing. None of these companies make any money. The valuations are way, way, way overblown right now. And you're just playing a game of musical chairs with all the other call option holders that seemingly want to make $1 million out of $1,000, guys. Unfortunately, it does not work that way unless you are buying these at pennies on the dollar and you loaded up 10, 20K of calls, then you might be a millionaire. But do not kid yourself. You are not going to buy enough of this stock here to become a millionaire. Sure, can you turn 2K into 10K with some call options? Yes, but what are you going to do with $10,000 after that, guys? You're going to try to do it again. You're going to try to flip 10K into 100K with another crazy play, then 100K into $1 million. How many people actually do that, guys? probably one out of what? One out of 100K, one out of 500K. You want to take your shot? Go for it, guys. That's why they call it the casino and the lottery for a reason. I'm not saying you can't win, but just know the odds are stacked against you. So if you are going to make a play, put in an amount that you do not mind losing. Use a stop loss below the lows. Set a take profit TP1 and then set a ridiculous TP2 like $30 up here. Perfectly fine, but you have to understand how to play these, and you have to play these with a very logical mindset. Understand you're in the casino and do not overstay your welcome, and definitely do not put more money than you're willing to lose. That is my commentary on quantum computing stocks. I'm sorry if you guys lost money, but I figured I should bring my own little bit of a reality check, considering the fact that I like playing these hype and momentum plays too, guys. You'll see me play them, you know, not very often, but I do like to play them sometimes, but you have to realize what you're playing, right? So that's enough about that topic. Hopefully that was insightful for you guys. All that being said, now let's dive into some juicy stuff, and I'll spend about 2 minutes on each one of these companies, but a few people have asked me for some requests, and I will deliver them because I've been saying, sure, I'll look at them eventually, and now I'm actually going to look at them now that we have a bit more time today. So first off, we're going to take a look at Max Alling. It's a great start to start a day with. Let me start over. Apologies, Max. It is great to start a day with coffee and your review. Is there any chance we can get your opinion on GWRE stock in one of the future videos? So I gave Max a reply in the comment section, but I want to show a point here when we're looking at different companies, right? Nothing wrong with looking at new companies, but you guys must understand, or you must criticize me sometimes, that I always focus on the same boring companies, the Mag 7 companies, the companies in my options lists, and I don't really present new opportunities sometimes. Well, that's just because I've curated this list of companies that I play. Why? Because they have very high options volatility. They have weekly options, and they have more price action history, and they just have more knowledge around the companies. They have more volume, right? They're more popular tickers to trade. And a lot of them also are either industry leaders or direct monopolies, right? So I have no problem looking at newer companies, guys, but just understand when you're looking at newer companies, you have to compare them against the best of the best. And this is what I'll be doing in this video. Guidewire Software, very interesting play. They provide software and logistics for insurance companies, more specifically casualty insurance. So what they do is they have software for all these big insurance companies, and they also use AI as well to give people the best policies to manage risks. You guys know the mathematical equations into actuarial sciences that go into calculating things for insurance companies. A lot of insurance companies are using somewhat antiquated models. So Guidewire Software comes in with, you know, kind of brand new tech, which allows companies to price in risk a lot better than some of the competition. So it sounds like a very nice business model, very nice niche for the company to operate into as a technology company as a whole, right? That being said, a few little quirks that I have with this company, right? Number one is the fact that they are not consistently profitable, right? Net margin is kind of a toss-up for this company. So that's problem number one, is inconsistent net margins. When you're a software company, I need to see high net margins. If you cannot give me high net margins being a software company after being public for the last 14 years, almost 13 years, guys, there's a problem, right? There is a problem. Let's call it how it is. They're a software company and they're generating the margins of a retail clothing companies, guys. That is not the best look for the company. That's issue number one that I have with this one. Issue number two is the fact that inconsistency in free cash flow growth, which is also a number one thing that I look for in a company, especially if I'm looking to put in a long-term portfolio. Now, usually when I do these long-term subscriber requests, I ask you guys to give me an idea of whether you want to do this one as a trade or put it in a long-term portfolio for the next 5 to 10 years. That being said, inconsistent free cash flow as well is a problem with this company. How are they going to buy back shares? How are they going to pay back some returns to shareholders? We don't know because the cash flow is inconsistent. What are they using the free cash flow for? Research and development, sales and marketing. That is what you have to look for in their earnings calls, right? I'm giving you guys tips. I can't do the full valuation right now. I'll be here 10 minutes per company. That being said, analyst price targets are slightly above, but nothing much above, right? Not that many analysts covering the targets right now. And look how inconsistent this company was throughout the COVID period. Now they're back to expanding EPS in a nice fashion and back to expanding revenue. But there was a period in time here from 2018 all the way through 2022, 2023, they barely grew revenue. Why is that the case? And will it be better moving forward? Or could they possibly come back into a revenue slump again? So those are a few problems that I have with this company. Revenue growth is nice at 13%, but keep in mind the company, guys, is only a $14 billion company. If you're a $14 billion company and you want me to buy you over Google, you need to show me some 25, 30% growth, right? Because as of right now, with the EPS and at the current valuation and the fact that we've ran a ton, the PEG ratio right now is a 2.33. The nice thing about the PEG is that we can compare it with other companies in different sectors because this is bringing everything to a common denominator. How much are we paying for the company's future growth now? And we can use this to compare different companies. Why would I pay a 2.33 PEG on a company in a niche? It's a niche company, right? There's no monopoly here. You can argue they have a competitive advantage, but are they a global monopoly? No. So when we compare them with a low free cash flow yield, you can compare them with Google, who's not even one of their direct competitors, right? Google has a 1.43 PEG. They arguably have roughly the same amount of revenue growth, 10% per year. I mean, GWRE is not sitting that much further, right? 13%. So why would I buy GWRE instead of Google when this company is trading extremely high? That's why I like my same boring companies, because they have moats. They have large competitive advantages. They're extremely difficult to disrupt, right? So I'm not saying this is not a good company. Their technology can be adopted, but what are we looking for here long term, right? With only a 13% revenue growth, Wall Street is not going to allow the multiple to expand that much. It already has expanded a lot. That being said, taking a look, guys, looking for some monthly consolidation, monthly higher lows. I'd be watching here 150 down to 140. Could be a decent little swing trade opportunity for some possible rallies towards the analyst price targets, which are about $200. But looking for a 2x on this company in a short-term time horizon, maybe because we're in everything rally bull market, but in a market that cares about valuations, not one of my favorite picks. Very good company, very good product, but this is another example of a company who I like the company, I like the business model premise, I like their product, but I don't like the stock price, right? And hopefully I've explained why. So thank you very much, Max, for that recommendation. Hopefully that was helpful. Now, Carol, Miss Unique65, one of our long-standing subscribers on the channel, they've asked me a few times for me to do them, and I've been kind of putting them back. So shout out to you, Miss Unique. Thank you very much. She always brings some very good opportunities to the table. Now we have APH, and we also have COHR. So we'll do APH first for Carol right here. Thanks very much. So taking a look at APH, and we're going to use some of the same logic that I just used for GWRE, right? So Amphenol Corporation, if you don't know what Amphenol does, guys, they're a pretty famous company in the semiconductor niche. What they do is they manufacture I was going to say odds and ends, but it really is odds and ends, right? They manufacture connectors for the entire semiconductor and electronics components of other industries as well. They have a ton of different products, but that's pretty much what they do. Wiring and connectors. That's it. That's all. Now, they are an industry leader in this component, but you can argue that they're somewhat more of an industrial play than they are a semiconductor play. I mean, electronic components describes it the best, right? And as you can see, this is a very solid and very well-run company, extremely well-run company. However, if it's in an industry that we're comparing it against, you have to compare it against the best of the best, once again, right? So we'll go over the numbers, but I just want to illustrate a point, right? So look, this is TSM in the same period since COVID. You can pull it back all the way to 2018 if you want. This red line here is Taiwan Semiconductor, an industry leader with a wide moat and a huge competitive advantage and very nice technology. They are up 2x versus Amphenol. So when I'm looking for a company in my long-term portfolio, I'm looking for the best of the best. And even my boring companies, right, such as Google, even my super boring, super classic tech companies, such as this one, like Google, so they're performing on par with Google. But Google has more of a moat, more of a competitive advantage, arguably, right? And Google is right there as well. And if you compare it with other very boring companies too, like I'll remove Google, you can compare this one as well with something like a Microsoft, also one of the reasons, right? So I know Microsoft is going to be an outperformer. I know they're never going to lose their competitive advantage. And look, Microsoft is up 2x over Amphenol. So yes, my companies are sometimes boring. Sometimes they're redundant, but at least they're a sure bet and they're always growing, right? That being said, there is nothing wrong with Amphenol as a business, guys. Very healthy revenue growth, very healthy EPS growth. But look, this is a $86 billion company growing revenue and EPS at the same clip as a $3 trillion company. How is Microsoft growing revenue and EPS more than APH at Microsoft's valuation? Doesn't make sense, right? That's why I go with the same boring companies over and over and over, right? So Amphenol, nothing wrong with this company. Carol always brings me fantastic companies, and this is one of them. Very, very, very solid business. That being said, we could take a look at the business, and you will see, guys, it's very solid. Very decent net margins, 15% range. Not bad for the type of business that they operate in right now. If you take a look at their EPS and revenue, you will see very consistent, and that throughout all markets, because they manufacture a product that everybody needs at any point in the business cycle. Very solid on that front as well. Very solid financials as well. The business is well run. They do not have that much debt in relation to the free cash flow and cash that they have on the balance sheet. So everything gets an A from me. In terms of the valuation, however, at $71, expanding at 12.8% EPS per year. The PE is 38.6 and the PEG is 3.01. That is very, very high, guys. There is no company except for Apple in the Mag 7 that is trading at a 3 PEG. So my question is, why would I buy this company over the Mag 7? I'm not even including companies like Palo Alto or CrowdStrike that have these similar valuations, but much higher revenue and EPS growth rates, right? So that's why when you compare things and you're looking for these kind of companies that pass under the radar, right? Not a lot of people look at the Amphenol chart, and I wouldn't be highly surprised if they don't even have weekly options, right? So if I'm looking for this one for a little bit of a swing trade, classic breakout retest, right? What we're seeing right now in the monthly, breakout retest the range of resistance, which is now support, looking very good for some possible continuation. But will there be outperformance if we are holding in the long term versus the QQQs versus some of the major components, some of the cybersecurity plays, some of the other semiconductor plays, such as TSM, such as ASML long-term, such as NVIDIA, such as Micron, things like that, right? These are the things you have to compare them against. And unfortunately for me, valuation a little bit high for me to put it in my long-term portfolio, but for a trend continuation expansion into $80 could be some decent risk to reward if we're looking for a swing trade. So thanks very much, Carol, for presenting that one to us. Very interesting analysis there. And now, where did my picture go? It must have gone away from me. So I'll open it again. Now, Sandy asking, hi, Will, can you do an analysis on SOUN? Yes, no problem at all. So this is another play, right? SOUN, this one, again, down tremendously this week, guys. All of the momentum plays are getting cooked one after the other, right? Daily downturn on SOUN, they achieved a high of $24. Nobody wanted to sell. Why? Because, of course, it's going to $2,000 per share, right? Have to take your profits, guys. You guys see a 4x in a short amount of time, 5x. I want to see you guys moving forward, not being greedy and taking profits, right? That being said, daily downtrend is in motion right now. Come into a last line of defense, which is arguably the $15 down to $13 range. On the weekly, guys, what are we looking for? Looking for a weekly higher low coming into the 12 EMA. That might not stop it, right? A lot of momentum to the downside. Very overbought conditions, guys. When you 4-5x and when you come into 90 on the weekly RSI, guys, can we please start taking some profits? Please do it for me, all right? Even if you have 100 shares, just sell one for me, guys. Sell one share for me, please, right? And then you can ask me, what do I do now that my bag is down here? But at least you will have taken my advice and sold one share up here or here or here. You know what I mean, guys? Clip out on the way. When you're in down here, you sell a little bit here, you hold, sell a little bit here, you hold. When you see some hesitation, you sell the absolute moonshot up here when the weekly RSI gets to 91. And then you've at least trimmed a good, 40, 50, 60% of your position. And the drawdowns like this start to hurt a little bit less, right? Or if you're buying up here, think 5,000 times about buying a stock up here, guys. Do not get caught up in the hype and the momentum. Right? SoundHound, what do? Very simple, voice AI. Think replacement of customer service agents, etc., with voice AI, right? Now, arguably, who has a better product than them, which has not dropped as much, is TWLO. I think TWLO's product is far better than SoundHound's. That's just me. Also, the other industry experts do tend to agree with what I just said. And TWLO also arguably has much better fundamentals than SoundHound right now. So I'm pretty sure none of you guys are looking at TWLO, even though this company is now starting to be slightly profitable. You can see a net nice increase in their EPS. EPS now negative to positive, very nice EPS growth, and revenue growth is doing decent as well. SoundHound, although they are coming along well, their valuation right now, guys, is a little bit crazy. I'm going to admit it's a little bit crazy. As you can see, EPS is not yet profitable, but they are growing revenue very nicely. That being said, guys, SoundHound is currently a $5.5 billion company, and forward revenue is $165 million. That is, for lack of a better word, terrible. Price to sales is absolutely terrible, even here at 15. So you can imagine what the valuation was up here, guys. Way too much, guys. Way too much. We're getting carried away. So can we possibly position into this one for a little bit of a swing trade? Yes, but at this point in time, I will be waiting for daily uptrend confirmation. You enter here, the stop loss goes below there, and then you get the highs, right? I'm not saying it's going to happen right there, but watch for the day, because you need to wait until this move is done. Eventually, the bulls will set a new daily uptrend. You wait for the confirmation of uptrend. Entry goes here on the confirmation of the uptrend. The stop loss goes below the most recent low, and then you're targeting the most recent highs, whichever they are on this rally, on this move down, right? So that is how I would play SoundHound. Definitely not a fundamental play for me. If I'm looking for fundamentals to have an AI voice agent for the future, I would tend to go with TWLO because I think they have a better product. They also have a partnership and funding by OpenAI with Sam Altman, who holds a seat on the board, I think, of TWLO as well. I just think they have a better product. They have more exposure. They have more partnerships with companies by now. And so that is my pick. So that is my thoughts on SoundHound. Nice company for momentum, but at this point in time, valuation is very stretched, kind of like Palantir. So at this point, when you've lost the daily uptrend, don't start picking the bottom trying to catch the falling knife. We wait for confirmation entries. We have a defined stop loss, and then we have a defined take profit level above the trade. So that's just how I'm playing those. And now, before last, we once again, I believe, have Carol with another request, which is going to be Miss Unique. Please review. By the way, like Carol has said her name in the comment section. It's not as if I know, you know what I mean? I'm not revealing anything here. So please review COHR next time, but if I know people's names, I'd rather call you by your names than by your handle. I mean, I could say Miss Unique 65 if you want me to. Please review COHR. So no problem at all. Let's take a look at COHR. We'll do one more and then we're done. So COHR, not looking the worst here on the chart. So if you guys don't know what Coherent does, also another company that is kind of an in-between factor, right? So what they do here is, I'll show you. They do a lot of laser technology for semiconductor, right? They have a very, very nice website as well. Let me just take you guys into this one, right? So you'll see leader in material and networking for cables and installations, server installations, stuff like that. And also fiber optics and lasers, right? The company has a ton of different applications, but essentially that is the gist of things of what they do. They have their hands in many different industries, such as a company like Micron does, etc. This company has many different products and solutions, but all in all, you need to understand a lot of fiber optic cables, a lot of laser solution, and mostly for enterprise networking solutions, right? So very neat, well, I wouldn't say niche, but kind of niche. Not everybody knows about it, right? That being said, you can see the business is somewhat of a very cyclical business. Booms and busts are many and not that few and far between, right? Really ebbs and flows with the status of the economy. And as you can see now, we've had the boom cycle and now might be looking for a little bit of a monthly retrace, possibly down. You know, if I can find Coherent, I wouldn't mind this company because I do know this company. Down here is the support level, right? Talking about 75 down to 63. Now, I know you guys don't want me to say it can go that low after rallying this high, but I mean, let's be honest, like it can have those big pullbacks. It's done it many times in the company's history, right? So that being said, we could test our moving averages down there and the lower end of support, and that would be where I might be interested with the company as a whole. All in all, though, not a bad business, just a cyclical business, kind of like semiconductors as a whole, right? You can see the cyclical nature of this business, the boom cycle, 2021, 2022, pull forward a lot of demand, now the bust cycle, and now boom again. I mean, I could pull up any semiconductor company, even though these guys are not directly related to semiconductors, it's the same cyclicality in terms of business flows, right? Look at onsemi. This is a semiconductor company, exact same chart for EPS, exact same chart for revenue. So when we pull up COHR, it's going to look the exact same. Now, coming back into the growth, 25 through 27, coming back into the growth for revenue as well. Not that bad. The company is a profitable company, although profits are very nominal and not that good, right? So that's one red flag for the company is lack of consistent profitability, and that as well is going to hurt their free cash flow. As you can see down here, very inconsistent free cash flow. Some years are good, some years are bad, but they do spend a lot of money increasing their installations. That being said, it's a $14 billion company. Long term, it could 2x. It has the total addressable market to do it, but maybe a little bit longer than people are expecting, right? That being said, revenue growth of 11% per year, very good. EPS 33% per year, but do not get confused, right? This is not their actual EPS growth rate. It's only growing that much because we have a big down year here. Then 2025 is just back to normalization, but this big jump is like a 2x in EPS, right? But they were there prior. So you have to take this EPS growth with a grain of salt, right? In all reality, the true EPS growth rate, if there is no cyclicality, would probably be like 15-12%. That being said, forward P at 93 bucks is 30.8. Now, when we divide this by the EPS growth rate, once again, the taken with the salt EPS growth rate, the PEG looks good at 0.93. It looks attractive, but this is somewhat what I call somewhat of a maybe value trap. It looks good with the pricing, but all in all, you know, it might be a little bit more expensive because the EPS growth rate is not that certain because it's a cyclical business. Free cash flow yield as well is quite weak at 1.3%. And the net margins on this one are not very high. So in the event the company runs out of pricing power or other competitors enter the market, this one does not have enough juice to defend its competitive advantage, right? It cannot get into a pricing war with other companies because the margins will just evaporate. They're already very slim, right? So that being said, if I want Coherent, if I like Coherent, I'd be waiting for a retest of support. 80 down to roughly $65 would be the mark for me. thin margins, thin free cash flow. Compare it with TSM, one of the, I know it's not the same industry, guys, but you just have to compare with some of the market leaders, right? That although they are cyclical businesses, they are market leaders. As a matter of fact, better free cash flow yield. Yes, the peg is a little bit higher, but the EPS and the revenue growth is a lot more consistent as well. So that is why I go with companies that have a de facto monopoly, a de facto competitive advantage, and, you know, are just leaders of the industry. That's why I go for these boring companies and why I always play the same companies, guys, because I know them like the back of my hand. And I don't have to ask myself any of these questions of whether or not the business is going to be disrupted in the next 2, 3, 4, 5 years, or is going to get into a pricing war and have its margins disrupted. So hopefully that's informational. Decent company, but I wanted a little bit lower. 80 to 65 wouldn't be too bad of a bet. And now lastly, Born Lucky 9564 asking for Rocket Lab. So this is going to be the last one, guys. I've already spent too much time on these. I'm supposed to spend 2-3 minutes, but you guys know me. I love talking and I love giving more analysis than is required. So Rocket Lab, very, very nice company, guys. If you don't know what Rocket Lab does, right? If you don't know what Rocket Lab does, just go on their website. They're the everything space solution company. They'll launch rockets for you to launch satellites and all the odds and ends possible. They even do, they're trying to compete with SpaceX to do, refueling and disposal missions for the International Space Station and stuff like that type of thing. So you can see, solar satellites being deployed, all types of satellites being deployed, stuff like that. So, right. So literally everything space company. They're supposed to be a competitor to SpaceX. But if you ask my opinion, SpaceX is just going to run away in this race. They'll be the market leader and nobody's ever going to catch them. They have far better technology. They have far better rockets. And it just is what it is. That being said, is there still a play on Rocket Lab? It's debatable, right? So that being said, space has been a very popular topic, not only with this one, but also ASTS, which is trying to replicate not SpaceX's business, but Starlink's business. They're launching a bunch of satellites in orbit and trying to establish a mobile network for cell phone service everywhere in the world, internet service everywhere in the world as well. Right? Rocket Lab is just the enabler. They're not trying to do that type of service. They're just trying to launch things into orbit and being a vehicle for that. So I'm not too sure how much the demand of this business is going to be affected if SpaceX really starts to corner the market. They've already cornered the market, right? The stock is up tremendously, guys. To be honest with you, it is no longer a good deal, right? At $13 billion, do they have room to expand? Sure, but long term, as I said, SpaceX, Starlink is a $120 billion valuation with $6.6 billion in revenue. So can Rocket Lab, I'm not going to go over the SpaceX valuation. You guys can do that on your own. SpaceX private valuation right now is about $250, $300 billion for about $20 to $50 billion in revenue, somewhere around there. It's been about 6 months since I've checked. So you guys can double check those numbers. Don't count me on that. But that being said, there is some room for expansion for this company, right? 2x down the road, 3 to 5 years, maybe 3x, maybe. But is this a 10x company? No, guys. So are you going to take $1,000 and turn it to 100 grand? Probably not, guys. It's all about market cap and against the competition, right? So do not get it twisted. Don't get ahead of yourselves, because the price to sales is extremely high. So although they are growing revenue very nicely, I will admit that the company is not going to be profitable for a very long time, if ever. Now, they're said to become profitable in 2027, but these are very far away estimates and anything can happen. Until they show me profitability, I'm not going to be convinced just yet. Revenue as well is ramping up very nicely, but you can tell at a 13 billion valuation right now for forward 613 million for 2025. Not the worst valuation in the game. I've seen worse, and we just looked at worse. Quantum computing stocks, and the other one, SoUN, is worse than this. Price to sales of 2022, not the worst. They do still have the momentum, guys, so this one remains a momentum trade. And when it's a momentum trade, I am only playing the technical analysis. Be careful, though. You do have longer-term weekly bearish divergence right there. So if the whole sector takes a hit, if the markets unravel, I would not be surprised. That being said, not the best entry right now. You can argue that they have broken above slightly on the daily. We're looking for the daily uptrend expansion. But that being said, if you're taking a tight trade, stop loss goes here, or looking for the expansion, possibly the $30 plus dollars, or on the weekly time frame, if you want to set the weekly lows down there, $6 worth of risk, you have to be kind of targeting 40 to the upside. And if you have a longer duration thesis on this company, which I think should be the case, anybody investing in this for the long term, I hope you have a 3 to 5 at least year time horizon to let this thesis play out. And I hope you have some money to dollar cost average, because starting a position up here is not the best. That being said, if you can find a position 20 to 15 sometime over the next 3 to 6 months, if the sector or the markets have big form consolidation, would not be the worst opportunity for a long-term lottery gamble play on the space industry as a whole. That being said, my favorite play is just buying SpaceX at this point, which you can find through a number of different ETFs. Unfortunately, I don't have them pulled up right now. Rocket Lab, decent play, but the valuation right now, you know, can it run more? Sure, guys, but unless you're going full YOLO out of the money call options, you know, 1, 2, 3 month call options, you're not going to make as much money on this one as you possibly think. It can still have some upside. It can still be a 2, 3x company, medium to long term, but so can a lot of other companies as well, right? So that's my thoughts on Rocket Lab, and that wraps up today's video. Went a little bit longer, you guys see, right? It was a 45-minute video, and then I just do 3, 4, 5, 6 tickers for a lot of our viewers here, and it turns into an hour and 20-minute long video. So apologies for that, but I hope you guys enjoyed it. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these every Monday to Friday after the close, except for tomorrow because tomorrow's a holiday. And lastly, if you have any questions at all, guys, please feel free to leave them down below in the comment section. I will let you know when we're going to possibly start the subscriber requests once again. I have a lot of other videos that I like to do. So if we do them, as I said, I would do them on a probably more than 2-week basis, maybe once every 3 weeks type of thing. But we could get some in just for you guys if that's something that interests you. Leave it down below in the comments if you want to see more of these subscriber requests where I go through these companies, technical basis, fundamental basis, give you my ideas for a swing trade, for a long-term investment, and anything in between. And also, guys, if you want to have access to the private Discord where you can ask me all of these tickers in real time, and I will answer you with charts with this same form of analysis. If you want to have access to the private Discord, where not only do I answer all of your direct questions on these tickers in real time, you also get access to all the live trades that I do Monday through Friday, all the wheel trades, the call option trades, the call debit spreads, the put credit spreads, the share trades, the leap call contracts, every single trade that I do in the for either small accounts, medium accounts, large accounts, everything is there. We also do the private morning live streams Monday to Friday for about an hour or two every single morning, where you can ask me to look at tickers in real time, and I'll review them the same way I just did on the channel. And lastly, you can also ask me directly in chat all throughout the day my thoughts on your stocks, your options, and everything in between. So if that's a service that might interest you, the private trading community, very strong community that we're building right now. A lot of our members have had some tremendous success changing their trading habits, trading psychology, and finding a lot of gains since they've been doing that. If that's something that interests you, the link is always down below in the description to the Discord. So hopefully I see you in there soon. If I don't, guys, well, I guess I'll see you back on the channel. So take care. Pleasure as always. I'm out for now. This is the last long video. Moving forward, everything is going to be 30 to 45 minutes, but I had to include those subscriber requests. Take care, guys. Have a good holiday tomorrow. See you on Friday. Have a good day of trading on Friday tomorrow. Take care. That's it for me, and peace.